Hi, Mark Anderson here, mortgage banker with Paramount Bank. I'm licensed to lend in all 50 states, and I would really love the opportunity to earn your business. If you would like me to evaluate your mortgage scenario, whether it's a purchase or a refinance, please do call or text me at the number below anytime. I don't keep normal 9 to 5 bankers hours, so you can feel free to reach out to me anytime. Can't say I will always be able to get back with you, but don't be bashful. Reach out. I would love to help. For today's mortgage rate update, overall this week has been a continuation of a trend for the last month of ultra low, historically low rates that are basically stable. Gone are the days of the incredibly volatile hour-to-hour swings in the bond market that were impacting rates. For a while there, it was very, very difficult to get a refinance locked down because I would talk to somebody in the morning, they would think it through to the afternoon, and by the afternoon we were in an entirely different market and higher rates, generally speaking. That phenomenon has fallen by the wayside, and we happen to be in this incredibly stable period of very, very low rates. Life is good. Couple things to think about. Things that could move this market, things that could change where the interest rates are at right now. It's all going to come back to COVID. So COVID is really what started this low rate environment. Concerns about what the virus could do to the economy caused the stock market to tank, thereby pushing more money into bonds, causing the bond prices to go up and thereby the interest rates to go down. We then saw a phenomenon where a lot of the money that was in bonds, a lot of the private investment money that was in bonds jumped out of the bond market. There was a big spike in rates where all of a sudden we were seeing rates with 4s in front of them again. That's when the Federal Reserve stepped in with this bond buying program. And over time, that has proven to be, at least for the present time, a stabilizing factor, and it's helped to keep these rates ultra low. So it goes back to COVID. If we're looking for something that's going to fundamentally change the interest rates that we're seeing today, going forward, it's all going to be COVID-related that's going to move this market, in my opinion. On one end of the spectrum, in terms of good news, let's say there's a vaccine that comes out. Let's say that vaccine is effective. Let's say that vaccine is going to be available soon. That would cause the stock market undoubtedly to massively benefit. Be a lot more money going into stocks. That would be a shot in the arm for the economy in general. Good news. Good news in the economy overall, unfortunately, is often bad news for mortgage bonds and thereby bad news for mortgage rates. So any big piece of good news about COVID, if you want to compartmentalize that, it's good overall, but that would ultimately be bad for bonds and could cause interest rates to come up. On the other end of the spectrum, if we see something very bad, we see bad stats associated with COVID, maybe something dramatic happens that turns the lockdowns back on in full force, things of that nature. Bad news about COVID. In my opinion, I don't think it's likely that news would actually cause the rates to go lower than where they are right now, at least appreciably so, but it would keep the low rate environment that we have stable and solid for the foreseeable future. This market is not going to fundamentally change until one of two things happens, possibly both. Really good news about COVID and the Fed slowing its bond buying program. So those are general big picture things to look out for. For the foreseeable short-term, midterm future, unless something moves there, I don't see these rates really moving. So I'm not going to tell you that you got to lock in right now or it's going to disappear. I think that it's smart to lock in right now because it is true that we don't know what tomorrow will bring. And good news about COVID could be right around the next corner. And that could happen at any time, which again would have an impact on this bond market that would not be good for mortgage rates. So get in while the getting is good. Please do call or text me anytime if you have any questions about your mortgage options. Please do like the video, subscribe to the channel, and please do share this content with anybody that you think may find it interesting. Thank you very much for watching. Have a great weekend.